speaker from the Wisconsin Grocers Association, Michelle Kussow.
Thank you. And just so the record states that it's not my fault, we went past 11 o'clock, so
Right.
I apologize. Thank you very much for the opportunity to speak today. I've been asked to specifically talk about the personal property tax and more from the taxpayer's perspective. So again, my name is Michelle Kussow. I'm here today on behalf of the Wisconsin Grocers Association, and we represent about 1,000 retail grocery stores across the state, chain stores, independent stores, food brokers, warehouses, and everybody else who supplies to the industry. But thank you very much for delving into this issue. It's very important. It's a huge issue to our industry, and we appreciate the opportunity to share some information on this. As the Fiscal Bureau talked about, there's many exemptions that have been added over the years, and it's made the scales tip to create a lot of losers and winners. In fact, in their paper that they shared, they said specifically that there's more personal property that's exempt under state law than is subject to state law. And when you look at the list of losers, we like to think that we are in that category left paying the bill, and that's Main Street businesses and small businesses. And the reason that we feel that we are paying more in the personal property tax is because of all of the exemptions that have been granted. And the items that are not exempted, that are still subject to the personal property tax, are items that are specific to retail and Main Street stores. Things like coolers, safes, sound and intercom equipment, surveillance equipment, signs, restaurant and bar equipment, soda machines, store fixtures, time clocks, and security systems. And all of these are high dollar value personal property that's owned by small businesses up and down the Main Street, like grocery stores and convenience stores and auto and truck dealers, just to name a few. But speaking again specifically for the grocery industry, they pay a large proportion of personal property taxes because of the expensive equipment found in their store. And to give you an idea of how much a grocer pays in personal property taxes, I did some research on this. The information is obviously available to the public. It's just not easy to find. So I was able to find the city of Wauwatosa's personal property tax records. And just to give you a sense of what they're paying, I'm not going to name specific names of the retailers, but a 60,000 square foot grocery store in Wauwatosa paid $26,993 in personal property tax in 2016. And the total assessed, because it's based on the assessed value, their total assessed value was just over $1 million, and about $950,000 of that was under the furniture, equipment, and fixtures category. And then they also paid $150,000 in real estate taxes, just to give you a sense of that. A slightly smaller store in Wauwatosa that's around perhaps 40,000 square feet, and that'd be like a Piggly Wiggly. It's not in this case, but you can imagine the local Piggly Wigglies, how big they are. They paid $18,559 in personal property tax to the city of Wauwatosa. And their total assessed value was about $807,000, and $750,000 of that was for furniture, fixtures, and equipment. So for many Main Street businesses like Grocers, it's necessary to have this expensive furniture, shelving, and equipment to be in business. And as I had said before, the Grocers in Wauwatosa had about $1 million each in furniture, equipment, and fixtures. And to give you a sense of what that is, refrigerators and refrigerators, coolers, shelving, things like that. But even a small grocery store that has maybe 4 or 5 checkouts would have $300,000 to $500,000 in furniture costs, just putting coolers around the perimeter of their store. And with the personal property tax, they're taxed over and over on that same piece of equipment. So for example, you imagine like a reach-in meat case that's about 8 feet wide. You can picture that at your local grocery store. The average cost of that is about $10,000. So the retailer pays a sales tax on that up front, and then every year thereafter they're paying their personal property tax, and it ends up, just for the ease of numbers, about $200 annually on that $10,000. And that's based on the average personal property tax rate in Wisconsin. But knowing this, it's no wonder that businesses are reluctant to invest in new equipment. I know I'm not supposed to advocate, but I do believe that it's a huge disincentive for businesses to reinvest in their businesses, to purchase new equipment. Also, it prevents them, they would use that money to hire additional employees or donate to nonprofits. I mean, they'd rather do anything but have to pay that back to municipalities, I think. In general, the personal property tax is not fair or stable. And I've compiled a lot of discrepancies. I participated in the symposium a couple of years ago, and there were a lot of really good points brought up, so I have a quick tidbit on those. A chair in one business is taxed, but that same chair in another is exempt. Because of the sick code definition, there are certain manufacturers that are not eligible for exemptions. For example, a dental manufacturer that makes teeth. By all of the definitions, they should be exempt, but because of Wisconsin's sick codes, and they don't mesh with the national, they're not exempt. Personal property tax delinquency is a tax lien against the person versus real property delinquency, which is assessed against the business. Personal property tax is valued at the true cash value. Nothing ever goes to zero, even if it has no value. For example, a restaurant oven that's so old that the owners couldn't give it away, but because they still have it, it's subject to the personal property. And Rick Olin addressed this specifically, and he said, property depreciates for 7 or 10 years, and then it's listed as residual value until it is no longer used. But again, it's always on the personal property tax as long as it's being used. The personal property tax statement that's filed annually is very difficult and cumbersome for some very small businesses. It costs even more for them to prepare the tax return than they are paying in. If that's not the situation in the grocery industry, it still does cost a lot to comply with the requirements of the personal property tax return. Municipal assessors complain about the personal property tax as well, and they have identified a few issues, back again to the symposium, but there are items that are being misclassified and they should be exempt, but they're being included on the personal property tax. Items that might have been discarded, but it still remains on the business's inventory list from year to year. And that there's a lot of confusion over items on real property taxes versus personal property taxes. And the example was built-in cold storage is considered real property, but oftentimes the business claims it as personal property. And there's little consistency in enforcement and assessment because of this. So essentially, reporting of the personal property tax is on the honor system, adding to the discrepancies found in paying the tax. Again, I'm not going to advocate on this specifically, even though we do hope that there's some changes made to the personal property tax, and just take a look at the fairness of the issue. And we are working with a coalition of business groups that all agree on this, and I will share the names of those groups and some information on the coalition.
Thank you, Ms. Kussow. Can you tell us, does your organization, have you done any quantifying, so using your example, the $26,000 in personal property tax at the 60,000 square foot grocery store paid? That's a direct expense. Do you have any way of quantifying what the indirect expense is to actually fill that out, comply with it, and deal with it?
Right. And we have asked for that information, the cost of compliance, and I just don't know what that is. I know that it is difficult. They have to collect that information. They have to work with an accountant or do it themselves, and it's a lot of time to prepare.
Could you explain to the group also the anomaly? So, for example, the example that I always like to use is a blender. If a bakery buys a $2,000 Mixmaster to blend dough, the bakery buys that same $2,000 blender versus a grocery store buying that $2,000 blender, or a restaurant buying that $2,000 blender, how's that handled?
Well, I think in all of those situations, they're all subject to the person. Is the fiscal bureau still here? I think they are still subject to it, but.
So the bakery would be considered a factory and be exempt. So the bakery would be exempt, but the restaurant would be taxable for the same piece of equipment.
Right.
That was my point. And then could you talk a little bit about the difference between the SIC codes and the federal codes, so that we all understand what that means?
I actually don't know that much about them. That, again, was an example that was brought up at the symposium on the personal property tax, that specific example. So, and that's a manufacturing issue. Their manufacturing exemptions are based on the SIC codes.
Well, and like you said, even a dental lab would be considered, it would be handled differently based on SIC codes versus the state, versus federal codes, and be handled differently. So we can get into that in another case. Anybody have any questions for Ms. Kussow? Yes, ma'am.
Thank you so much. Thank you, Mr. Chair. Michelle, is the depreciation deduction that that Grocers can take, is that in the formula for determining the personal property value, or is there a separate depreciation deduction that retailers?
I have never seen anything specific. Today, when Rick brought up that 7 or 10 years, that was the first time I have seen that. I just know it's based on the value of it, so, you know, the businesses will depreciate it on their own based on the value, but there obviously is a specific formula.
Answer that for us, if there's some way we can find out. So she's talking about a regular amortization depreciation schedule that you'd use on a balance sheet. Is that the same or different than what property tax, personal property tax would be calculated on? Can we find that out?
Mm-hmm.
Any other questions? I'm not sure. Go ahead. Okay. All right, I think what we'll do is, if we have no more questions, this has been very, very informative, and I think, you know, and to me, I think taxes are sexy, so this is fun. But we may need to have more coffee for some of you as we move into this thing. Next week, I'm really, really looking forward to our next piece, which will be sales and use tax, and I think we'll probably be seeing Ms. Kussow at that one as well. What I'd like to do is just stand